Have you ever wondered how cryptocurrency influences the real world? Then let's go. Hi and welcome. In today's episode, I'm going to walk you through a bunch of industries that cryptocurrencies are revolutionizing. The first one is the most obvious, the automation of financial services with DeFi. DeFi arrived to bring a new layer of financial services, powered by blockchain and smart contracts, allowing the users to trust code and not people. The DeFi ecosystem is filled with platforms where you can trade tokens or borrow money and all these financial services without the dependence on a centralized entity. And it's both more transparent and more economical. DeFi is also more inclusive than the traditional banking system. Anyone can create a wallet and then take part of all the financial services that DeFi offers, but not everyone can become a customer of a bank. And with that said, DeFi is probably the most important use case for blockchain technology. The most adopted industry in crypto is gaming. With blockchain technology, the players can have real ownership of objects and assets in games, a highlight that so-called Web3 or blockchain games have brought, but can be implemented by all games. This means that the virtual items that players acquire in the game, like skins or weapons, can be unique, scarce and transferable thanks to the use of NFTs. Digital property can also be used to create a token-driven in-game virtual economy where players can sell, buy and exchange digital objects. Today, Web3 games and blockchain-powered metaverses are real use cases for this technology, thanks to NFTs and smart contracts that optimizes ownership in these games. The next one you might have heard of in the context of Rihanna and Bitch Better Have My Money. It is the distribution of royalties with the help of NFTs. NFTs are unique tokens used to represent exclusive digital assets like artwork, collectibles or music, unlocking a range of utility and benefits for fans, and not only in commercial or speculative appeal. In the world of music, NFTs open up new possibility for royalty distribution, allowing artists to receive fair compensation for their music and also to share their royalties with their fans. This allows for a fairer and more transparent distribution of royalties. Musicians can create an NFT that represents a percentage of the copyright in a song and sell it directly to their fans. And this brings me back to Rihanna and Bitch Better Have My Money, where she did exactly this. She sold 300 NFTs representing a percentage of the copyright, generating royalties from the streaming of the song. Next one is decentralized social networks. Social networks powered by blockchain technology offer the users a decentralized alternative, allowing them to share content and interact securely, privately, and without any invasive surveillance. Blockchain technology is used to guarantee security and privacy of data, avoiding censorship and protecting the identity of users. The blockchain-based social networks takes back the power from the big companies like Facebook or TikTok, and it also gives the content creators a bigger cut from the monetization of their content. The next one might be a boring one, but it's an important one. It's transferring money on the internet with stablecoins. Stablecoins are cryptocurrencies that are backed by fiat currencies, like the dollar or the euro. And sending money across the world through the traditional banking system can be very expensive. So sending stablecoins instead solves this problem. Stablecoins can also be used to pay for goods and services online, opening up new possibilities for e-commerce. There is a rising use of stablecoins linked to the US dollar, particularly in economies with economic uncertainty, like Argentina, Venezuela, and Turkey. The potential of stablecoins in the digital economy was a key point for the digital payment giant PayPal to launch their own stablecoin linked to the US dollar, called PYLUSD. But the true potential of blockchain technology in payments remains to be seen. And I'm back from the hairdresser. The next one is decentralized optimized digital maps in real time. In this sense, decentralized maps are maps stored in decentralized databases, which are updated in real time thanks to the collaboration of users. This allows for greater precision and reliability in the representation of geographic information, due to the ability to update map information in real time, something that the traditional systems such as Google Maps and Apple Maps it requires a greater time interval and physical and economic resources to achieve. Another point where blockchain technology stands out in these decentralized maps is in the privacy and management of user data, since in traditional map systems, locations are often tracked and user data are accumulated.
How dare you!
One use case that I think can have a real fast adoption rate is the customer reward model. With blockchain technology, companies can create more efficient and transparent rewards and loyalty programs, thanks to tokens or NFTs with the utility for customers such as access to products, services, or activities or special benefits for their loyalty to the brand or company. The use of smart contracts open a new universe of possibilities after the programmability of reward models for customers, allowing the delivery of rewards to be automated and improving the customer experience in general. Brands can take advantage of this blockchain technology to build new digital ways to interact and build loyalty with their customers, such as encouraging the customers for interaction, purchases, or other types of participation with the brand. Multiple brands have already started to show the potential of the blockchain technology in this sense, such as Starbucks with their Web3 program and Odyssey with their NFTs issued on the Polygon blockchain. The next one has also gained a lot of adoption. It is global transactions and micropayments with Bitcoin. Making money transfers and micropayments through the traditional banking system can be very expensive. And with an alternative like Bitcoin, that doesn't only lower the cost, but it also increases the speed and the transparency of transactions. Especially for companies that carry out work and hire international staff, the Bitcoin option is much more convenient and secure when it comes to paying fees or making micropayments for specific project work. Without a doubt, Bitcoin and cryptocurrencies are real and current options for thousands of workers as an alternative for sending remittances and payments, especially for independent workers and freelancers, who may also even open up new markets, and with the security that they will be able to receive your payments with a low cost. The next one is not my favorite, but it's digital fashion. Numerous brands in the world, many of them among the largest that exists in the world in the fashion industry, already take advantage of the capacity of blockchain technology and NFTs to offer digital items and pieces inspired by digital art, their identity, or products and services, which promotes the idea of digital fashion online for virtual worlds. Luxury brands such as Gucci, Louis Vuitton or Rolex have already explored the use of NFT digital collections to offer new digital fashion experience for their customers, in an effort to expand their reach in the marketing of items such as shoes, clothing and accessories beyond the physical space. The sports apparel giant Nike has already become the leading brand in terms of sales of NFT digital items as part of their Web3 strategy. And their items can already be found in various of EA Sports games. However, the use case of blockchain technology in the fashion industry goes beyond collectible digital items. Blockchain have also proven to be a valid technology to fight against counterfeiting products and tracking supply chains and protect intellectual property of designs. The next one you might have heard about, it's cooperative governance with decentralized autonomous organizations, DAOs. DAOs are digital entities that operate through smart contracts that allows the participants to make decisions in a democratic and transparent manner. A transformative digital cooperative that can be used for fund management, project decision making, and conflict resolution.
Did we just become best friends? Yep!
However, the popularity of DAOs encompasses multiple use cases, ranging from governance of crypto and blockchain projects to project financing, collectors and media, to forming pools for investments like the MakerDAO project on Ethereum. The next one is maybe a little stiff one, but it's decentralized Web3 domain names. These decentralized domain names on the blockchain is used to eliminate the visual difficulties of the cryptographic addresses by providing access to simple addresses like vitalik.eth, for example. You just register on the blockchain and connect them with your wallet or your email address or your website. This means that instead of relying on the centralized domain registers, blockchain technology allows the creation of domain names that are directly owned and controlled by the users, positioning itself as a form of digital identity adapted to the evolution of internet towards the Web3. In addition, these decentralized domain names are more secure and resistant to censorship, since they do not depend on a central authority, but on a public blockchain that offer transparency in operations. On Ethereum, for example, the Ethereum name service has helped thousands of people to register their own domain names for a specific time period that the user decides, and paying with cryptocurrency or fiat currency. Now to the last one, the one that everyone is talking about, Bitcoin store of value. One of the main premises of Bitcoin is its ability to act as a haven during times of economic or political uncertainty, both locally within the country and international, due to conflicts or macroeconomic problem. Bitcoin is maturing to this asset that is an alternative to store of value, considered by many superior to gold due to its decentralization, scarcity, and resistance to censorship. Even though Bitcoin's value is still following the asset market as a whole pretty close, and the Nasdaq Tech 100 even closer. That is the 100 most traded tech stocks on the New York Stock Exchange. But it moves further and further away from that and becoming its own independent asset. But there is still a lot of adoption that needs to happen before Bitcoin is this store of value. The store of value part has been relevant in times of disaster and war for people to bring their assets with them when they're fleeing their homes. But the other side of wars have also used Bitcoin to protect their assets, but against sanctions directed to their home country. Obviously, there are a lot more use cases for crypto out there. And if you think I forgot an important one, let me know in the comments. And like and subscribe, and that's it.